Okay, good afternoon and welcome all to the ION webinar, Tactical End-to-End Planning in Life Science. My name is Bart Paridan, consultant at ION Life Science, and I'll be your host for today's webinar. My colleague Jan Veerman, partner at ION Solutions, will next to that give a demonstration of a flexible cloud solution prototype that enables organizations to create visibility and allows for rapid scenario planning and decision making. Before we start with the presentation, there are two announcements that I'd like to make. The first one is that we will be recording the webinar to allow for us to publish it on our website. So that's just for your information. The second one is that I will now shortly explain the functionality of the GoToWebinar application so that you know how to answer questions also along the webinar. So here you see represented the control panel. On the control panel, you can select your preferred audio settings. These are default at using microphone and speakers. But if you wish to use your telephone, you can select that option in the menu, and the number and access code will be made available to you. During the webinar, all attendees are excluded from speaking. But if you have any questions during the webinar, you can type your question in the box as shown or raise your hand at the end of the presentation. At the end of the webinar and after the demo, we will open the webinar so that you can speak out any questions that you may have and we can answer interactively. We will collect all your questions and answer them after the presentation. Just in case we would run out of time, we will make sure that we get back to you with an answer on detailed questions after the webinar. And just finally, there's also the option for yourself to minimize the control panel by clicking on the arrow button of the control panel. I will now start with the presentation itself. First of all, short outline of the agenda. So just for those of you who don't know ION yet, I will give a short introduction on ION. After that, I will introduce the topic of the webinar, end-to-end planning. Then Jan will take over and introduce shortly the tool in which we've made the planning model, which is Anaplan, followed by a demo of the planning model. And in the end, I will provide a summary and allow you for questions. So first of all, a short introduction of ION. ION is a consultancy firm based in the Netherlands, but operating on an international scale. The main focus areas of ION are projects and interim assignments, but we also offer solutions from our ION Solutions business, and we offer, for example, academy services and importantly also forecast services, where we support customers in their forecasting process on several levels. As I said, ION is a company that operates internationally, so you can see that also from the selection of customers that we have in the different industries that operate on a global scale. So that was an introduction of ION. I will now move on to an introduction on end-to-end planning. So first of all, if we look at the life science industry and then more specifically the biopharmaceutical industry, we see that companies in that industry have to deal with an increasingly complex planning network. And first of all, we see that from a market perspective, product offerings are evolving into full service offerings. Also, that demand forecasting in more and more markets is challenging due to, for example, the effect of tenders, which is a very specific effect. And there's also a constant pressure on supply chains due to ongoing merger and acquisition activities. Next to that, we see that from the supply side, there's a clear trend, an ongoing trend towards outsourcing and CMO activities, increasing not only the size of the supply network, but also the complexity to manage it. Next to that, pharmaceutical supply chains are driven to a great extent by for example, shelf life restrictions of the product. This often means that significant inventory cost is tied into obsolescence of inventories as well. Next to that, we've experienced that many companies struggle with legacy situations, both in terms of system landscapes that are often very scattered and poorly integrated, as well as organizational setup. So for example, companies with very locally driven processes for which it is difficult or time consuming to consolidate into a global end-to-end overview of the supply chain. And all of these factors put pressure on planning and forecasting and drive that companies need an integral end-to-end process to drive their supply chain planning, which is the pressure on planning that you see here. We believe that best performers succeed to run this process well on a technical level, where decisions on the technical horizon are related to the question of whether or not the company is still on track to follow its strategy and whether or not operational short-term and or mid-term corrective actions are required. Talking about end-to-end planning, it all starts with end-to-end visibility. Starting your end-to-end journey, it's good to realize that the basis for well-underpinned and efficient decision-making is that you have full visibility of your supply chain. The other three elements that we consider to be key elements that drive tactical end-to-end planning are rapid market demand propagation, scenario planning, and inventory control. And you will see those items coming back throughout the demo as well. What we mean with rapid market demand propagation is the ability for a company to instantly turn your forecast into requirements for your supply network, both internal and external supply network. Scenario planning is the ability to run scenarios both on market events and supply events, where you can think of tender demand as an example again of a market event, and for example batch obsolescence or batch rejections as a supply event, where you would like to monitor the effect on your supply chain. And the third one is inventory control. So having an end-to-end insight into your supply network and the inventories that you have, and also the projected inventories that you have, allows for you to control integrally your inventory, and also to see what your obsolescence risks are throughout the supply chain. Then we will now move on to Jan, who will first give an introduction of Anaplan and will then present to you a demo of the planning prototype.
Yes, thank you. My name is Jan Veerman. I will take you shortly through a few slides on Anaplan to position this cloud-based planning tool. Founded in 2007, already a lot of global customers, as you can see, 325 plus, over 100 plus apps available in their app store for you to check. Truly cloud-based, one of the few unicorns already now in the world, meaning 1 billion worth of the company. And we were one of the first Benelux partners starting in 2011 in the Benelux. So we've done a couple of implementations in the S&OP area, and based on that we've created this end-to-end planning model for the pharmaceutical industry, which we will show in more detail in a couple of minutes. Looking at what Anaplan can do for you, it's a cloud-based planning application where you can build different models, for example, supply chain models or finance models, sales models, or even more into the operational side of it. And looking at the different models you can see here, you can then connect those models into one overall model, or make sure that, for example, HR data is sent to the finance model. As you can see, there are a lot of large customers already using the Anaplan environment. You can see here McAfee, HP, Salesforce. So worldwide, they have a lot of large customers already using this cloud-based planning application. And based on that, we created this model that we will present to you from this point onwards. So I will take over the controls here. Yep, and then I will be the presenter. And I hope you all can see my screen here. And what I will do is now start my web browser, and this means that it's not linked to a specific web browser. I'm using Safari, but it could be any web browser that's out there, for example, Internet Explorer. Just to make sure that I'm connecting to it directly from my web browser, I log into their default site. I have to supply an email address, my user ID, and a password. And when I log into the application which I have the rights to access. So as you can see here, a lot of tiles. And each tiles is a specific planning application that you can use. In order to minimize, you can only look at, for example, the favorite ones, just by selecting all or the favorite ones, and the favorite ones are the ones with the black stars on top. You can see that this is also a very usable environment for any tablet. If you have a tablet, you can just access the web page, and then you can swipe and click on any tile that you would like. So I'm now opening the demo model, and this is a truly cloud-based in-memory planning application. So it means that the application is now loaded in memory on the Anaplan service, not on your laptop, not on your desktop, but in memory on the applications service from the vendor. And in this case, what we will see is it opens a dashboard, in this case for me. I'm logged in under my own user ID, and in this case it opens my default dashboards. This is a setting that you can change per user, but in this case it opens my multi-node MRP application on the dashboard. And what we will see here are different graphs and tabs with holding the data, tables as you can see. And we will go over them one by one, just explaining what we will see here. So the first one is we're looking at the finished goods, for example. And in this case, the demand is flowing in and shown here on the net requirements on this side. This row in here that is also presented in a graphical way. I really like the fact that you can combine tables and graphs in one dashboard overview, making it very clear for an end user. For example, peaks in your requirements here on March 16. You can see that also back in the figure in here, the 1077. So this means, for example, if I look at that specific number, it has a safety stock targets, which is from the previous month 777, decreasing with 29 to 748, with the initial independent demand coming in, meaning a net requirements of 1077. So that translates in the end to the next level in this model, which will be the production side. So the 1077 is presented in here as well. So you will see that in the next table, the 1077 on March 16 is the same for the Netherlands as a production site. So this will be the net requirement for that site to start producing. And this is still, we're looking at the finished goods. As you can see, the graph in here is still the same. So if we translate that to the next level in the bill of material, which in this case is spec 1, I will deselect a few lines in this graph. It makes it very interactive. I can select them again back in. So this is a very interactive way of looking at data, but you will see the same graph showing up in here. So the net requirement of the finished goods from production side in the Netherlands is translated into a net requirements again of the 1077 for March, in this case for the Netherlands. for the finished good. But if we translate that to the next level in bill of material, which is PEC 1, we have a conversion rate of 7. So 7 times the 1077 translates into the 7542 due to the conversion rate. So if we select that one, we will see the same one now for the PEC 1 environment. And that means that with an offset, in this case, of 1 month, in this specific model, there is an offset of 1 month. The net requirement, because it needs to be produced and available with an offset of 1 month, the net requirement will be 1 month earlier of 7522. So if I select that specific line in here, you will see the shift in the peak, now moving from March to February. So in this case, very visible, clear how making use of the bill of material translates into the different layers, into the time offsets that are set as parameters for this specific model. And then going into one level further, when we do see that we need to move that to, for example, in this case, Mexico, where the translation in this case of the PEC 1 netting for the overall company is then translated into an overall net demand of a total demand translated based on what's already the requirements from safety stock. You will see that net requirement in here. So deselecting lines in here makes it very clear how you can switch between the different lines and the different measures that are modeled in here. So hope that is clear. And then if we look at the last graph in here, what do we see here? It's the requirements from the specific levels from finished good to PEC 1, bulk 2, bulk 1 and API. So in this case, this is following the complete bill of material. So in this case, if we go, for example, we can easily slice and dice in this environment. So we're now looking at all the sites. But if I, for example, select France and I select the lines I do not need in here, I will see the requirements for, in this case, the finished goods. And if I then go into one level into more detail, we can see, for example, if we then go to Japan and then deselect the finished goods, but select the bulk 2 environment, we will see that it translates for this site into the bulk 2 requirements. Then, for example, we go one level down, for example, to the USA, where we can see it on an API level. The active pharmaceutical ingredient, and then we'll see that into a requirement for the API level. This is nice, but we would like to see that in the table overview, as we did see on the other tables and graphs. So what we can now do is switch to a different mode where we can see all the tables in this specific model that are available. And if I scroll down to a specific table, I can open a table, and in this case it's the exact table as we did see in this dashboard, where it's shown in a graphical way, but now it's shown in the table overview. And I want to add this table to this dashboard. So it's opened, and you can see here the total site name again, but then you can see the different layers of the bill of material in here. By pressing on the View menu item and then Publish to Dashboard, and I select the number 1 dashboard, the multi-node MRP, and it's added with a single click to this specific environment. I save it, and I exit the dashboard design because it's of no use to me from this point onward. And if I now select, for example, USA again, it corresponds to the figures I see here. So if I select December 13, it shows 13. It's exactly the same number as in here. If I select now, for example, France, which was on the finished good level, you will see that my table also represents front. So this is dynamically linked. The selection that I make here is also presented in my table. And as you can see, the figures here, 7275 for March 16, is also, sorry, that's May, is also presented in here. Also, I can do it the other way around as well. I can select, for example, the Netherlands, which will show up in here and also show in the table, in the graph. Moving on to the next part in here, I've made options here to select the next dashboard, going into more detail on the tender demands. So this showing me a table where a planner can enter any tender demands that's out there. And you can see a graphical overview of the world in here. It's difficult to see, but we can see here the USA, we can see Germany, and we can see Saudi Arabia. And this is the requirements that we do see here on finished good level, the net requirements. We see here a bill of material from the finished goods all the way down to the API level, and then for this specific also the bulk 1 level. Now there is a tender demand coming in this case for Germany for April 2016, and we think it will be a tender demand of 20,000 units. And if as soon as I press enter, it immediately is recalculated into the model. So I do see that in this case my tender demand is recalculated into the net requirements, so taking into account all the available stocks, but you do see that now my tender demand in April has a peak of 16,000 and also a peak in January due to inventory. And you see that now that there's for Germany, there's a tender demand available by coloring code. And as you can see that here, it translates for this specific article, as we did see in the table, it now translates to the bulk 1 level for this bill of material. That's the 525517. And you can see that due to a shift in time of the 1 month time lag, you will see that it translates to 347,000 items for this specific bulk 1 item, and also the 1 month time lag for December, corresponding to the net requirements that we did see on finished goods. So it's easily seen here how quickly that it translates in the model, using the bill of material, using other parameters that we put into this one. So tender demand can easily be managed, in my opinion. And the last dashboard that I wanted to show here is the inventory control. So what we will see here for a specific API, we can have different batches that are produced to make this API. And that's corresponding to the graphical overview in here, which presents the net requirements for this specific API. But we then get, for example, the message that a specific batch has become obsolete and we need to take out of the net requirements calculation. So we need to take the stock out of the net requirements calculation. So for example, we have a global inventory of 200 items for this specific API, and we want to exclude it. Just by pressing the exclude box here, the model starts to recalculate it, taking out of this stock position, resulting in a higher net requirements in the months upfront. So the inclusion and exclusions of stock is easily, of batches, can easily be managed and seen in a graphical way in this application. And the other item, as we do see here, as the management of your inventory and obsolescence items can easily be managed. What we do see here is a per different types have finished goods. We will see here pack 1, bulk 1 and 2. So the different layers with bill of material, we see per item a minimum and a maximum stock level, and a total inventory quantity. And the total inventory quantity in this case is measured along the minimum and the maximum. And if it falls within those boundaries, you will see that it is called within. So in this example, we have an inventory stock of, for this specific pack 1 item of 80,000, and the minimum is 65 and the maximum is 184,000 items. So this perfectly fits within the minimum and maximum bandwidth. But for example, this one, this is finished goods. We have a total inventory of almost 13,000 items. That's way above the minimum and maximum levels that we do see here. So in one table, one graphical overview, we can easily see which item needs our attention and why. Because they're below minimum stock or above maximum stock. What you can also see clearly here is the obsolete quantity. So in this specific example, we have almost 13,000 items on stock, but there's also almost 11,000 items of obsolete stock. For whatever reason, they have become obsolete. So that can be translated into the monetary value if you want to model that. But in this case, you can see based on that what is obsolete and take corresponding actions. Well, that's in a very short and very quick an example of how end-to-end planning can be modeled in this case, a cloud-based planning application. And with that, I want to give back the presentation to my colleague, and I will change it back to my colleague Bart, who will then take over.
Okay, thanks Jan for the demo part of the webinar. I will share my screen again. So we've seen in short some of the functionalities in a cloud-based tool. Of course, this is a demo model, but it shows, let's say, the elements of end-to-end planning that can support you in tactical end-to-end planning. So having a quick insight in your supply requirements based on the market demand, the ability to model effects on your supply chain, both from a market and from a supply perspective, and also very strong, I think personally, is the end-to-end overview of inventory, and also batch obsolescence, so projected stock risk. What we see furthermore is that, and we haven't been able to demonstrate all of that, of course, given the time, but there's a very solid ability to slice and dice data. So not only can you easily model, let's say, dashboards and modules within the tool, but it's also easy to zoom in or to drill down to data elements. We've presented already some of them, but the tool has very strong visual reporting capabilities. So working with dashboards and representing data in a graphical way. What we haven't showed here, but that's also possible with Anaplan, is to connect and write back data to source systems. So that has been the content from our side. I would like to go over now to questions. So let me see. Jan, maybe you can unmute the audience as well. What I'll do first then is I'll go over to some of So I'll first move to some questions that we received and also have received from people that were not able to attend the webinar. And after that, I will also give you the opportunity to post your questions interactively. So the first question that I'll answer, and I'll answer two questions at the same time. So what we've seen in this model very briefly is, of course, that the demand signal is propagated through the end-to-end supply chain, and that it calculates supply requirements. The question could be is whether it's also possible to model capacities and to deal with, for example, multiple sourcing in such an end-to-end model. So the answer to that would be is that the current model, the current demo model, does not contain those elements, but they're typically elements that could be modeled quite easily into the functionality of Anaplan. So where you would extend, let's say, the functionality of the tool not only to provide you with the signal of your supply requirements, but where you could also test that, let's say, a sort of rough cut capacity planning versus your available capacities or versus your current production plan. Another question would be is whether it's possible to work with alternative bill of materials. Jan, maybe you can answer that question.
Yes, I can. For this demo model, what we have done is we've created one bill of material, but the tool is very flexible to model different bill of materials, so the user then can select per product, so to say, a different bill of materials. So that is very easy to create. And to maintain in this planning environment where the end user is in control which bill of material then to use for the calculations. Based on that as well, you can also add scenarios to the model, different scenarios where you can see the difference if you use one bill of material compared, so to say, for scenario 2, another bill of material, and see the differences in the calculations and the outcome for the net environment, so to say. So the tool is very flexible to handle changes like that and input flexibility like that. I hope that answers the question.
I then see that we've received a question also from the audience, Jan. I think this is a question that you can probably answer best.
Yes, I see it. It's in Dutch, so I have to translate it. It seems question is it seems very to another APO SNP solution from SAP. What is the support fee of Anaplan, turnaround time to make changes in source systems to Anaplan? So first of all, there is a huge difference, in my opinion, to APO SAP and this Anaplan environment. One of the biggest differences, for example, is that for APO you need to have very skilled knowledge to set up your model and maintain the model, making it very difficult to maintain yourself as, for example, as a business user, unless you have the specific APO skills. In this case, Anaplan is very flexible for an end users to maintain the model. So if you're very good at using, for example, Excel functions like VLOOKUPs, you can be the one head power user to maintain the Anaplan model. The other advantage is that changes to the Anaplan model are immediately recalculated into the model. So the outcome of any change, for example, a different bill of material, the change in, as we did see in obsolete stock, in tender demand that does come in is immediately recalculated, and you can see based on that the impact on your net requirements throughout your bill of material items. and also the impact that it does have on, for example, maybe your suppliers or your customers. So it's very quick and very flexible in translating all the user requests into the model. Other difference is pricing. Anaplan is a fraction of the cost of what SAP APO means, not only from a licenses part, but also from implementation sides, implementation part. We do see that the implementation of an Anaplan environment takes for a normal model to about 30 days, and for the more complex ones to about 60 days. But then you have your models up and running, and of course you need to connect with source systems. For example, that could be an ERP system where you load in your dimensional data like products, customers, bill of materials, and stuff like that. But once that's loaded, you do the calculations, and the end result can then be easily be sent back to your source system or data warehouses. I hope that answers the question. If not, then please request for a more clear explanation.
It answers the question. Thank you.
Thanks.
Okay.
Thank you. Then there's
one more question that we've received prior to the webinar, and that's in this model we consider the demand forecast to be an input. So the question could be whether there's also a way to generate the forecast within the tool. I think the answer to that is also, so as Jan has stated before, there's quite a wide range of solutions possible. So it would definitely be an option, and it's also what we've done for other customers. Meantime, is to also have a demand planning function within the tool, and connecting that then to this end-to-end solution. So it's very well possible to work with different modules, let's say, that you connect in the end as one planning model in the tool. So it's rather flexible in that sense. That covers so far the questions that we've received. Is there any other question from the current audience on either functionality or on the technical specifications, for example, of the tool? No? Okay. Then I would like to thank you very much for joining. I would just like to inform you that we will also be publishing on short notice a somewhat more extended leaflet on end-to-end planning, which gives you a bit more reading, so an interesting read. Furthermore, of course, if you have follow-up questions, or if you're interested in to get to know a bit more on the demo model or Anaplan, please reach out to us. If there are other topics in planning or forecasting where you're interested to discuss with us, then of course we're open for that as well. So thanks a lot for joining, and have a good day. Thank you. Bye bye.
Thank you. Bye.